we're going to compare the personal loans from LendingClub and Prosper. We've spent years working in the lending industry and we track dozens of lenders. We want to break down these two lenders so that you can see which one might be better for your situation. The first thing that we're going to look at are the loan amounts that they offer. LendingClub's minimum loan amount is $1,000 and Prosper's minimum is $2,000. If you need just a little bit of money to cover a short-term emergency, either one of these lenders might be a good option. But I will highlight LendingClub because they offer more flexibility on the low end. If you're looking for a more substantial amount of money, LendingClub will lend as much as $40,000 and Prosper will lend as much as $50,000. I will highlight Prosper because they have the higher top loan amount. Both LendingClub and Prosper will offer loan terms between 2 and 5 years. This is pretty standard for personal loans. Unless you're borrowing a lot of money, I would avoid terms over 3 years. The longer term will allow you to keep your monthly payment low, but it will mean paying a lot more interest overall. Now let's look at the cost of the loans. LendingClub's minimum APR is 8.98%, and Prosper's minimum is 8.99%. That 0.01 percentage point is a meaningless difference. For a $10,000 loan with a 4-year term, that amounts to less than $3 in interest expense. If you can get a loan with a 9% interest rate right now, you're doing pretty well. So I will highlight both of them. Both companies have a maximum APR of 35.99%. There really isn't anything special about that rate, so I won't highlight either one of them. LendingClub charges an origination fee that will be between 3 and 8%. Prosper's origination fee ranges between 1 and 8%. A little more than half of the lenders that we track charge an origination fee. Any fee over 6% is getting to be a little bit on the high side, but 8% is not the highest in the industry. So these numbers aren't necessarily bad, but they're also not great. So I will not highlight either one of them. The origination fee is a percentage of the borrowed amount and comes out of the proceeds of the loan. So if you borrow $10,000 and have a 5% origination fee, you will receive $9,500, but you'll still need to repay the $10,000. Remember that the origination fee is accounted for in the APR. The APR is the origination fee plus the interest rate. All things being equal, you want a lower origination fee if you plan on paying the loan off early. Paying off early will save you on interest that you would have paid, but you don't get a reimbursement of the origination fee. Both LendingClub and Prosper target borrowers who have fair credit scores. Prosper cautions potential borrowers that they will struggle to get approved if their score is below 600. I think the likely range for these lenders is between 620 and 700. These are, of course, guidelines. Lenders don't actually use credit score to determine eligibility. They will use information like payment history, debt-to-income ratios, utilization, income, and other financial information. The most common type of borrowing for personal loans is unsecured. This means that you don't have to put up any collateral to secure the loan. I like unsecured loans because additional financial setbacks are less likely to create a domino effect on your finances. LendingClub only offers unsecured loans. While unsecured loans are the most common loans that Prosper offers, they will offer loans that are secured with your home equity. They offer both home equity lines of credit and home equity loans. Home equity loans use the value stored in your home as collateral for the loan. If you fail to repay, they can put a lien on your home or foreclose. Given that risk, why would anyone consider a home equity loan? Well, it's much easier to be approved, qualify for more money, and qualify for a lower rate. I will highlight Prosper because they offer this option. LendingClub will not accept a cosigner on your loan, but Prosper will. A cosigner is someone who agrees to pay off your loan if you fail to repay it. If you can get the loan you need on your own, there's little reason to entangle a loved one in the process. On the other hand, if you struggle to get approved for a loan, a cosigner can strengthen your application. I will highlight Prosper for allowing cosigners. If you are using the loan to consolidate credit card balances or other debt, LendingClub will directly pay off your other creditors with the proceeds of the loan for you. Prosper will not do that. It's convenient when a lender will do that, but it also shows that the lender knows that the loan will repay other debts and not just stack on top of them. Because of that, the new loan won't change your debt to income ratio. This should make it easier to be approved by them. It's good that LendingClub offers this service, so we'll highlight them. If you are late on a payment, both LendingClub and Prosper will charge you either $15 or 5% of the late amount. These are pretty standard rates, but almost half of the lenders that we track don't charge a late fee at all. So I'm not going to highlight either one of these lenders. Some lenders have other fees as well. Prosper will charge you a paper check fee if you'd like to make your monthly payment by check rather than ACH withdrawal. If you do pay by check, you will pay $5 or 5% of the payment amount, whichever is less. If your payment does not go through, you will be charged a $15 failed payment fee. They also call them insufficient funds fee. I am highlighting LendingClub because they don't tack on any additional fees. So let's summarize the personal loans offered by LendingClub and Prosper. LendingClub and Prosper are fairly evenly matched lenders. LendingClub offers a slightly lower minimum loan amount, and Prosper offers a slightly higher maximum loan amount. They have comparable APRs and origination fees. Prosper offers more types of loans and will accept cosigners. LendingClub will directly pay off your other creditors when you use them to consolidate. LendingClub also does not add additional fees. All in all, I think either of these companies would be a good lender. But for many people, the most important thing about a loan is whether you can get the money that you need at the lowest possible APR. That's why we always recommend that you shop around before you accept a loan. Find the best deal. At the Yukon Project, we've tried to make shopping around easy. If you visit our marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of the approved offers so that you can pick the loan that's best for you. If you have any questions about either one of these lenders that we didn't cover, leave a comment below and we'll try to answer it. If you found this video useful, please like it and subscribe to our channel. Thanks for watching.